Initially, I thought I wasn't going to do a stream today, but I'm going to do one. I'm going to do one. All right. Now, markets are currently gapping down. Okay. I talked about this yesterday in my community. I said, this looks like could be a swing high from the daily candle from the previous day, not yesterday, the day before. And we broke out of that balance. Okay. And we took back, if you can see it here, the Trump sugar rush candle. I talked about this. I said usually when that happens and it's still the war is not over, it gets taken back. Boop, taken back. Gone. Nasdaq, gone. ES, gone. Okay. Now, what do we have here? A trend going lower. Okay. Trend going lower. Look at the last 4 hour candles. Pretty bearish. Right? You got an excess buying wick right here into demand. Right? This is last week's highs. Lows. So we could break last week's lows. This market just never ceases to amaze. Okay? Good morning, Mark. So, the Iran, it's been striking like some oil transport stuff in the Strait of Hormuz. Okay? I think they killed one person or something like that. This is not over. Oil spiked to over almost $100 a barrel again. Remember, crude, not USO, not Exxon or Chevron, crude futures, okay? That's WTI, Western Texas Intermediate, light crude, okay? Is inversely correlated right now with the market, okay? This happens a lot of times with war, anything. Now oil spikes, you should see the market be inversely correlated with it. Sometimes it is correlated. It all depends, right? Oil affects everybody. Now, do I think this will crash our market? No. Nope. But higher oil is just not good. Okay? Hurts everybody's bottom line. We pay more at the gas pump. Airlines pay more. Like, it's just liquid gold. Everything's refined from oil. Okay? So, that brings us to today. Okay, there's really not much going on besides data today. Okay, I had a pretty decent day of trading yesterday. I had a nice long early. Then I had a nice long late. I actually had a little short too. But it got like I have a liquidation setting on one of my funded account for Top Step, and it because it like I think went back a tick or something, it liquidated me and that thing fell. And I'm like, oh my God, if I didn't have that setting on. But whatever. It's all good. All good. All right. This week, I'm having a good week trading and made the adjustments. Sticking to my guns about my plan. And if I see it, fire off. And I've been doing it. Okay. I've been doing it. And that early volume really helps. Okay, the early volume really helps, and again, I hit a gamma flip point in the SPX yesterday as support, and the thing rocketed with a Trump news thing at the same time, and boom, 2.5 hour winner. All right, can't complain about that. Okay, so let's get this started. Welcome to my channel. My name is Steven Gonzalez. I use market profile, volume profile, fund structure in the markets along supply and demand, gamma exposure levels, and the most traded price of the year, the week, the month actually, the week, the previous day. Okay, that is my edge. Also use market internals. Oh, that's my baby. Those little market internals are my baby. All right, anchor VWAPs. Okay, little ICT thrown in there, right? And and my weekly expected move indicator. Now I'm trying to look around the bend here to see if anything has breached an expected move for the week. Just give me a sec. I'm just scanning. I'm scanning. I'm scanning. I don't think anything has that I can see. The market's pretty much not going anywhere today, or this friggin' it's just crazy. Okay, crazy. All right, now hopefully join me every morning. Subscribe, set that alert. All right, I give you the market news, the economic calendar, the leaders and the laggards, the why the market does what it does, technical analysis, and I give you the long and short trade scenarios in the Nasdaq and the ES futures. Okay, now if you want more in-depth coverage, okay, you're going to join my Discord. Confluence Trading. Okay, go to my YouTube homepage, click on the link and sign up. What are you waiting for? Let me be your indicator. Okay, good luck. Love you. All right, saying goodbye to my daughter. Now, I was talking about my Discord, right? So instead of me telling you, oh, I was right again. Oh, I was right again. Right? I'm working on trying to get my pre-market scenarios because I do give you, let's go to my Discord. I do give you pre-market scenarios. I got to put yesterday's in there. Okay, so this is the proof. These are time stamped before the market opens. These are proof and they're bookmark with my ES NASDAQ scenarios. Anybody can go there. What I'm trying to automate, it's give me a little problem because captions don't get like I have captions going right now, but then the transcript doesn't get loaded till later. I'm trying to make it automated so I don't have to type it up because I say it, right? I say it. Or I'm going to have to really quickly type up something short. Okay, but what I'm doing is I'm trying to create these daily receipts. Okay, so I have my little bot come and ask me questions every day. And so far, every day, my scenarios from the morning, like look right here, yesterday, bullish. We are in a mini balance, looking to long the balance lows. That's exactly what I did. Okay, that's exactly what I did. Now, yesterday, look, markets pretty much stayed in balance, right? Pre-market scenario long and the ES played out perfectly. Caught a long early on the session for this is actually 2.5 hour profit. Okay, so that's what I'm trying to build, and I'm building a database of these calls as well. Okay, so it's going to give me like a scorecard of my calls, and I know my members in my community intraday also know when I'm calling the market saying, hey, we should probably stop here. Hey, we should probably do this here. Hey, caution, I wouldn't be too confident of a short here. Hey, we're going to reach the anchored view up for the year, the most traded price of the year. Be careful. We usually don't bust through those levels, right? I know that my community sees that live every day. So intraday, if you're not live with me, right, you're not seeing all the calls. But that's why I made this channel the daily receipt. Okay, because you can see they're time stamped yesterday, in the morning, before the market, during the market open, that you're seeing my calls, what I'm saying. Okay, it's time stamped. Now I want to work my pre-market scenarios in there because it's really important. Okay, I just don't talk like and say, oh, I called that. No, every day I'm calling it. Pretty much every day I'm like, this is the best opportunity. Okay, so come join. Bottom line, come join. Come join me live. All right, come join me live. I know I don't just talk, and I wouldn't put this up there if I didn't believe and have confidence in my calls. I would be scared to put that up there because I'd be like, I'm not that good. I'm not that good. You're right. And I always say, I am not the best trader. That is the goal, to keep getting better and better, because you got to execute, right? But this is very important, right? For everybody who's trading, is that you want to feel the pulse of the market. You want to be one with the market. When I'm watching the market, I've seen stuff before. It's not like, oh, I don't know what happens in this environment. Oh no, I know. So it's important. That's only you only get that from experience, right? That was a time I didn't have this experience. I couldn't talk about the market like I do. I couldn't say, "Hey, take it easy. We're probably not going to sell off," right? Because you just seen it over and over again. That's just experience. Anyway, just come join. That's the bottom line. Now let's get into futures watch list here. What is moving our markets? Okay, what is moving our markets? The VIX is back up to a 26, up 7.18%. That little old VIX is not going down. Okay, crude back up $6 a barrel, up 6.89%. Silver up 2%. We got 10-year yields up 4.2 yield. That's not good for mortgage rates. Dollar up 0.27. Gold flat. 30-year bonds being sold. Bitcoin down 0.29. Ethereum down 0.43. Nasdaq down 0.66. ES down 0.70. Dow down 0.85. And the Russell, the rate sensitive Russell, is down almost 1.5%. Moving on to the Mag 7 Plus. We have no leaders here at all. Everybody's down. Everyone is down. Let's go over to the 1%ers. Or we'll go close to the 1%. Google down 0.80. AMD down 1%. Broadcom down 1%. Coinbase down 1.16. JP Morgan's the laggard, down 1.36. Top sectors. You got Exxon, Chevron, no surprise. They're up. Now, who's down? Walmart, Uber down 0.43. Visa down 0.68. So it looks like financials is getting hit a little this morning. All right, Caterpillar down 1.07. Goldman Sachs is your laggard. So financials getting hit today. Interesting. Let's see if that's the laggard today. It is. No shocker there. Crude is the leader. I mean, XLE. Don't confuse XLE with crude. They do not go lock and step. Okay? Let's see who's lagging here. Big heavyweights here. Technology down 0.65. Discretionary 0.65, down 0.65. Industrials down 0.65. Semis down 0.88. And your laggard is financials, down 1.23%. Financials is your second largest market cap weighted sector in the S&P 500. Okay? Now, moving on. Let me run a little script here. You won't see it, but I'm going to run it. So give me 1 second, because I just want to run a little script. Give me a second. Let's see here. Here we go. Alrighty. Let's go over to the economic calendar, folks. Now, building permits, housing starts mean nothing. Exports, none of this jobless claims have not meant anything in a while. Fed Bowman speaking at 11 a.m. Maybe. All right, Trump. All right, that guy was talking a lot yesterday. All right. Let's see. 10 a.m. President receives his intelligence briefing. 1:30 p.m. President participates in a policy meeting. 3:15 p.m. President participates in policy meeting. Well, you just have to make sure whatever he talks to the press, he is going to say something that moves markets, right? He likes to say war's over, but I think that's going to be gone if he says that again. I don't think the market's going to react to that. I don't think the market's going to react to that. All right, let's see here. Let's move on to juice. Would say the juice got. What's juice got? Not much for us here. Let's see what the risk is. It just says stock decline as oil prices kept climbing, with Iran escalating attacks on neighboring states and deepening disruptions to crude shipments. Talked about that already. All right, what do we have here? Anything here? Eli Lilly was marginally low after the U.S. drug market said combat the weight loss drugs. I want to see if anything was with financials. Why is financials getting hit? All right. Moving on. Let's go to more news. Here's some of the color on this attack. 6 vessels attack in Gulf Strait of Hormuz as war puts merchant ships on front lines. Let's see here. U.S. opens unfair trade probes to rebuild Trump's tariff pressure. Software companies fight back against fears that AI will kill them. Oracle's Mike Cecilia is the latest software owner. What does it say? To wait. It's the latest software CEO to wade in on the debate of whether artificial intelligence tools heavily automate human tasks will mean the demise of the industry. His verdict was a resounding no. Anthropic, who Trump said they're not going to use anymore, seeks appeal court stay of Pentagon supply chain risk designation. And let's just see if anything in here. Let me see if anything in Blackstone. Let's see here. Nope, nope. Just trying to see any Citigroup. Let's see. Oh, here we go. Here we go. All right. Not sure if this is it, but Goldman Sachs Group, JP Morgan, and Bank of America. The Pentagon is building a new team of investment bankers steeped in private equity to invest $200 billion over 3 years in defense deals, Semaphore reported on Wednesday, citing, let's see, a document it had reviewed. The Department of Defense is specifically going after Goldman Sachs, Morgan Stanley, JP Morgan, and Bank of America's prime recruiting targets for the 30-person team. The report said the document prepared by search firm Hedrick and Struggles pitched a chance to serve your country and deploy more capital than most investors deploy in their entire careers. Semaphore reported. Okay. All right, here we go. Morgan Stanley, the Wall Street banking giant, has limited redemptions on one of its private credit funds after investors sought to withdraw almost 11% of its shares outstanding. A regulatory filing showed on Wednesday. A flurry of bad news following several credit issues in recent months has drawn fresh scrutiny to roughly $2 trillion private credit market. Maybe that is why financials are hurting. I'm going to be honest, I don't fully understand all that. I don't have to. Okay. So, what I want to do now is we're going to look at some breadth charts. We're going to see the state of our markets. Okay. Let's look at some breadths. Give me one sec while I pull it up. So, what I want to see here, I love looking at these because it always gives you a really nice view of what the market, okay, breadth, and it's a beautiful thing. So, bullish percent index of the S&P 500. Look at its weakening. This thing was middling for a long time. So this is weakening, okay? 45% of stocks on buy signals. Now look, right here is the last time we were down to 37.5. That was December of 2025. The weaker you get, that just means less and less stocks in the S&P 500 percentage are on buy signals based on point and figure charts. Forget about the point and figure charts. You can look it up on your own. It's like zeros and X's. It doesn't use time. But it's just a beautiful indicator. Look, we can tell the market is weakening, right? Now, let's look at the NDX. All right, that is your NASDAQ 100. 56. 56. Okay? That. Look at the jump. Remember, software was getting sold off. Tech, I have been talking about it every day. Money's been flowing into tech. It's back at 56% on buy signals. We just looked at the S&P 500 was in the 40s. Okay? Every day we see this. Whoever's in my community knows. Tech's been leading the markets every day. Now, let's go one step further to technology. The actual technology sector. That is improving. It's at 50%. Look, it was down to 25% on buy signals. All right? 50 in the middle. So people are buying tech. You look at software companies, they've been recovering. I had Palo Alto at a buy at 142, and I took it off because I'm like, oh, I don't know. And then bought right bought right up from there. All right. Now, finishing off the breadth, we're going to look at the percentage of stocks over the 50-day moving average. Woo! Look at this, folks. Look at this, folks. I was talking about this thing. Look at this thing. I was like, wow, the market's holding up. This is when tech was selling off. The overall market, 39% of the S&P 500 stocks, only 39% are over their 50-day moving average. This is a sign of weakening breadth. Now, if technology starts to sell off, this market's going to fall. Okay? But tech has been getting bought. I just showed you that. So pay attention to XLK. Maybe IGV is a software. Pay attention to that sector. If technology has a day where it's down 1.5%, 2%, and the breadth continues to get worse, this market is going to fall. How much? I don't know. I never know. Okay, but I'm hoping when I point this stuff out, it makes sense to everybody. Moving on. Good old breadth charts. All right, let's move on. Let's go to those market internals, my baby, my bread and butter. All right. Let's talk about the internals. Okay. Now, yesterday, we were not strong. But look at this right here. I'm going to show you something. Tech only down slightly. It was green earlier on. Remember, the market's not going to go down that much. Okay. Now, this was my long here. When that market was holding that SPX gamma flip point, I got that move. I got long somewhere here, and boof, caught that 2.5-hour move. Later on, this sweeping candle, then I got that pullback, and then I got out around here, something like here, I think. And then, of course, it pulled back, and I was just like, you know what? The market was middling. I said, it could fall easily because the internals weren't strong. But then it wound up, it would have hit my target. Well, of course it would have, right? But let's look at the market down here. These Valdez 1-to-1s, you're not going to go that far. You're just not. And we're in balance. Okay? None of these numbers are super bearish. And these numbers all here go with the overall market from the previous day's close. Remember, my market internals, or I call them the weighted AD, and if you see me state it in my Discord, I call it the WAD, W-A-D, weighted AD, okay? This is everything. This is how our market moves, based on market cap weight of the sectors above us. Each sector has a weight, 32.4% in Infotech, XLK, financials, 12.5%. Right there is amazing. It's almost like, what is that, 45% of the market cap weight in two sectors. That's why I said, be careful with financials today being down so much. However, look what we hit, a big negative gamma level here in the 6750. That's also why I got long. Gamma levels to the rescue. Okay, gamma levels to the rescue. This is not a ICT thing. This is a gamma exposure level. Remember, the options market is the king. It's the tail that wags the dog. Trust me, my members can vouch for the gamma levels. All right, I post them in my Discord. The flip points. I don't give you the whole thing yet. Okay, I give you the flip points, which are awesome. Now, we're going to go over the daily charts. Dailies. Let's do it. All right. Now, this is a mess. I've been talking about the mess for a while. It's a mess. Okay? Now, what I said yesterday was, ooh, that could be a swing high. and this can take this market back down, take away that sugar rush from the Trump. I talked about the sugar rush. When something comes out of nowhere like that and the market just rips, and really is it true the war is over? No. It was already taken back, right? So, what did we do yesterday? Hit that 9 EMA daily. Hit the 9 EMA daily, right? And then kind of went down, but then look. Indecisive candle. There's last month's lows. Closed back inside last month. Okay, we're still inside last week's range. There's Friday's close. So far we're positive for the week. Hanging on by a thread though, because you know where we're at right now? 672. At last week's close, right there. We're actually below last week's close. So if we were to open today and close there, it would be a negative for the week again. Okay? Now, futures. Futures. Where are we? Look at futures. Swing high. And I said it yesterday. Swept that high. Whoop. Little doji. Whoop. Yesterday. Couldn't go back. Now look. Took out this low. Took out this low. And look. We're bouncing off last week's lows. Underneath last month's lows. Okay? Working off the Trump sugar rush. This, to me, right off the bat, looks like we're going to go lower. You don't have to. But to me, it looks like we might go a little lower. Because right here, it's not like we swept this candle and we're up here. We're below this low. Okay? Now, Qs. Remember, I told you, technology has been catching a bid. But look at this resistance. I talked about it the other day. Look at that anchor view up for the year. Year-to-date anchored view up. Look at that thing. Oh, let's see. Let's just track that year-to-date anchor view up. Oh, we broke it once. And then look, resistance. Oh, you try to break it again, resistance. Oh, you tried it again, resistance. Oh, you tried again, resistance. Trust me, put it on your chart. Year-to-date anchor view up. Okay? You want me to share it with you? I'll share it with you later. Someone in the chat wants to be shared that year-to-date anchor view up. All right, so now, what do we do? Came up there again yesterday. Sold off. After the doji candle. Look, we took out the previous day's low by a hair. But held above the 20-day simple moving average and the 9 EMA daily. Where are we now? 604.37. Gapping down. All right? We're down here. We are right here. Below yesterday's lows. Now, you got two supports here. This could really cause this market to go down. Now, Friday's close is here. Notice that. Notice how much distance there is. We're above last week's close. We're positive for the week. Remember, the SPY is negative for the week right now. Futures. Futures. Here's our futures. Mess. Remember, I talked about this friggin' mess. Right? There's that swing high. I said swept this high, swept this high. Went up to last week's highs. Ooh, lower high. And now this is a little different. You just swept these lows. Now look, you're coming back into range. Now, like I said, I would think we go a little lower today. You might get a push up for a premium to short. I am not sure. Look, we tried to break out of last week's range. We're inside last week. Those are the orange lines. Inside last week. Now look, that yellow right there. Oh, don't worry about that yellow. I can't talk about that on this chart. Okay? That's what we're dealing with, folks. All right? Now, move over to the hourly charts. Hourlies. Doing a lot of talk singing today. All right. Hourly chart. Let's do it. Let's do it. Let me get my marker out. What a messy market. And if anybody says, ooh, I know what's going to happen in a week, they're lying to you. Nobody knows. If they're snake oil salesmen, if they tell you, ooh, I'm going to tell you right now what's going to go. No, you don't. No, you're not. All right. So what do we do? Right? Remember this big balance range, right? Then we came what? In the middle of it. Gross. 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 Okay? Sugar rush from Trump. Then we tried to hold this range. Look at the ES. Remember, I talked about this yesterday. I said, look at the week to date anchored VWAP and look at last month's lows. And that's your last line of defense for the market. If it breaks it, then congratulations to the bears. It couldn't do it. Not yesterday. Okay? Well, I was pointing out in my community, look at this. Lower high, lower high, lower high. Failed into supply, right? Lower high. Well, guess what? Boom. Broke down to last week's lows. You got a little buying. Went right into where? A bearish FEG. And supply. Right here. Failed. I would expect us to at least go back into this area. The 670, 6715s, the 6700s. That's what I would expect. Okay? We're now moving down. Taking out the Trump, right? Now we got to deal with this demand zone. Again, temperature check. Just because I'm saying, ooh, I expect to go down, I'm not telling you I expect it to do this. Okay? Remember, the markets are squirrely. They make you think something's going to happen, then they do something else. Okay? So, what could happen? Okay? This is the mechanics of the market, and it happens every day. I explain this ad nauseum in my when I'm live. I explain it here. The markets are very efficient, and you see it constantly on every time frame, but the 1 hour you specifically see it here. I'm going to explain it. I explain it all the time, but I'm just going to explain it again for people to understand. This burst, right, is from the Trump sugar rush. That is emotional buying. It's one-way traffic. This I like to refer to as the elephant on a toothpick. There's my Elfie. And toothpick should not hold up an elephant. If it does, like here, 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 you buy it. Because it's telling you there's an imbalance there, but that's strong if it goes into the imbalance and gets bought. Okay? However, if the market gets weak, that is the toothpick holding up the elephant, and what do? Smash it. So everything in the markets are efficient. They're symmetrical. Burst move up, poor structure. Burst move down. Complete admission. You took back the weak structure just like that. Guess what happens when you go down like that? You get buying structure that's symmetric again, efficient. Okay, so why am I saying look at this move up? Guess what can happen? Straight back down here. Now, I don't know what will happen here. We could do this and get bought. That's why you have scenarios. What I think's going to happen, if I had to guess, this market is going to dip down into this demand, maybe even tap last week's lows. And what I'm going to tell you right now, most likely it's going to get bought, and it's going to think buyers are back. Now again, this is not what I don't know about the markets, what's driving the markets. And I think what happened here is you're going to get a little premium here to sell. Think you're on Marketplace, Facebook, and you want to sell something. You want to sell your PlayStation. You're not going to sell it for a low price. You're going to sell it at a premium. So if you can't take out that swing high, guess what the market's going to do in this supply? It's going to go like this, whoop, and it's going to take out what? The rest of that structure and go like there. Your target should be here. Now, what the market does after this, I don't know. It could do this, come back in, then go lower. So today, right, I'm probably not trading. My bias would be to the long side. So I'm sorry, to the short side. All right. I think the easier play is probably a short. Now, there's always openings for the long. I just said that we said we should probably go up because it's ready to, right? You need to get some it's always a two-sided market. Okay. Now, let's move on to the Nasdaq. Nasdaq. This is a mess. This is a big mess. Okay? Big mess. So, in the Nasdaq, look at this. It came right up to this resistance, right? Swing high, lower high, lower high, lower high, right? This is your balance lows. Now, the 249s I've been talking about constantly. Constantly 249s. That was at support. Well, it broke finally. And now what did we do? Retested it and we're going lower. And what are you at? Month to date anchor view up, week to date anchor view up. And look at the flatness of the month to date. That tells you everything you need to know. That means our markets are doing nothing. There's equilibrium, which makes it a tough market. Okay? Same thing. What do we do? Trump, poor structure. Boom. Took it back. Boom. Took that poor structure back. And guess what we have again? I think we can make the move lower. Right? So, same thing is the Nasdaq. Where are you at right now? The most traded price of this year. Right here, this green box. You're underneath ultimate balance. This is now turned into a bearish structure. Previously, I was like, oh, as long as we hold above the 249s, we're bullish. Well, guess what? We're under the 249s now. It's changed into a bearish structure. Bears just landed the upper hand. Okay? So, let's see if this plays out today. Now, this is just pre-market. I don't know what's going to drive the market. Like I said, this is what I can see. A little push down into demand, and this gets bought, and you're like, uh-oh, here we go. And it's going to slam into this supply in the bearish FEG here. And if you don't take that swing, and you get something like this, and you get a lower high, get ready to short that sucker. Target the 247s. You're probably going to have a little problems after the 247s. You got a demand zone here. Okay? Remember, you want to make the move easy. This is your target, 247. Now, hold a runner, be my guest. This is going to have problems here. Why? Because there's a demand zone here. There's a base here. You don't rip through things like that. Now, if there's some super bearish news, you can. Okay? That's your Nasdaq. Under 249. Bearish structure. The bears have the upper hand. Boom. Now, let's go to the market profile, volume profile. We'll map out some scenarios here. Okay, we are gapping down in these markets. This is your market profile and your volume profile. All right. Now, I'm going to mark it out real quick. So what do we have here? Gap fill, 67.49. Lines up with a major supply zone. Okay? You actually have right here, confluence, overnight highs, line up with the most traded price of yesterday. Okay? We came into a demand zone, popped out of a demand zone. This is your last week's lows. Right here, 67.15. Okay. Now, this is our market right now, gapping down. Okay, let's get right into scenarios right now. Okay, what I'm going to start with is what I'm biased to. Short. Okay. So, what I believe might happen is we're in a demand zone. You got this packet here. It's doing it right now. Okay? What I believe probably might happen, you're going to come down either to this last week's lows, try to push a little lower, right? And then maybe do this and then this. And it's going to make everybody believe, oh, boy, market's getting bought up again. And then you have this major supply. Also have a bearish FVG. Okay, right here. So what I'm saying is, this is your premium. That if you get a wick and a lower high in this area, you could take out these buyers. And then you short targeting overnight lows, 67.05s. Now, below this, you have a nice little fall. You could go all the way down to 66.50s. Okay? Now, the most traded price of the week is right around 67.68s. Now, this, our market's nuts. So this could also happen. You do one of these. This is still in supply and go like this. Wick under that also could be the sell. Now, of course, the market internals will tell us, oh, tech strong or tech's weak, and then that's usually giving my bias for the day. That usually gives me, but you can see right here, the week-to-date anchor VWAPs has been resistant in the ES, right there. Okay, now for a long, for my long people out there, all right, my bulls. Remember what I just mentioned in the bearish scenario. If you want to be a bull, be my guest. Into demand, right? Bullish FEG from the past. Why don't you get a little sweepy? Overnight lows. Let's say you do this and you go whoop, lower high. There you go. Boom. If tech's leading, right? You take this off and you target supply at 67.50. And what does that supply start at? Gap fill. You want to hold on for dear life and try to go up? Try it. That's it for my longs. Nasdaq. Remember I told you, Nasdaq has a bearish posture. You are underneath the 249s. You are underneath ultimate balance. Ultimate balance is this. When you were above or holding 249s, I said, hey, they cannot lose 249s. Now you're losing month-to-date anchor VWAP, week-to-date anchor VWAP, and look at the structure. Remember what I said. There's a ton of volume traded up here. Look at it here. You can see it in the orange. That's the monthly profile, and you can see it in the weekly profile. If you leave that volume, what do you think is going to happen? Okay? So, you are gapping down. Gap fill, 24873s. 24873s. Okay? Now, scenarios. Okay. Remember, I am biased short. So, what do I want to see? Well, like I said, you come into this demand zone, I think you're going to do one of these. Either you're going to just go into demand and you're going to rise up into somewhere around here. Remember, this is the most traded price of this year, around 248.35s. You could reject there, and there's your short. Take out the overnight lows. Now, remember what I said. There's multiple demand zones here. It might not be too easy. Maybe target the 246s. Okay? Remember, the Nasdaq has been relatively stronger. Okay? Now, also, what could happen? You push up into this supply zone. You fill the gap. Let's say you do this. You fill the gap here, and then, supply. Bearish FEG, and then you do this. Lower high. Ooh, boy. Target those overnight lows. You want to hold a runner. 246. Okay? Longs. There's always a long to be had. I'm just not in the favor of the long as much. Not saying I wouldn't take it. Okay? Here we go. What do I think can happen? Well, what if you go down and smash that overnight low and go right back into demand? Look at the little pocket of volume here. All you need is to close back inside, get the higher low, get your discount, go for the most traded price of the overnight, month-to-date anchor VWAP around 24830s, right? Try for this supply, gap fill, 24873s. 24873s, yes. or the overnight highs. Right? That's it. I don't really want to be long. Now, again, market opens, technology's driving it. We have to see. All right, folks. That's it for me today. Didn't think I was going to do a video, but I couldn't help myself. Smash the like button if you enjoyed that analysis. That would mean a lot to me. Okay? Now, as always, I do this every morning. Subscribe, set that alert. Give you the market story, the economic calendar, the market news, the leaders and the laggards, and I also give you technical analysis, followed by long and short trade scenarios in the NASDAQ and the ES futures. Okay? Now, if you want more in-depth coverage, you're going to join my Discord, Confluence Trading. Go to my YouTube homepage, click on that link, sign up. What are you waiting for? Let me be your indicator. Okay, now today, I will not be going live. However, I have to take my wife. We're going in the city, so I won't be live. However, I wish everybody good luck. Now, I've been nailing my pre-market scenarios every day. So, look at those scenarios. Save them. I'm going to post them in my Discord. Okay? Every day they've been playing out. Everybody have a great day. All right? Remember, no trade's a trade. Trade your print. Trade your process. Okay?